What's up, guys? Welcome back to another video. Today we're going to go over a few different plays, a few different market breakdowns for over 100% in gains. Every play I called was called in a Blueprint trading group. And with that being said, let's get into it. So first things first, we have SPY. Now this was a play that I called on May 20th, right? So this was an over the weekend swing. Super dangerous, super risky, especially in these market conditions, but I did it anyways because it was a high probability setup. How was it a high probability setup? Well, as you can see, SPY has been on the downtrend for a very long time, right? Let's say since 462, March 29th, we've been on a complete downtrend, right? It's been super bloody bear market, but you know, we're still getting through it. We're still trading because we can trade on the downside as well as the upside when we're options traders, right? So in this situation, I noticed that we had found support on May 12th, or was that May 12th? Yeah, May 12th, May 11th, we found support around 385, right? So I go ahead and put my support down there around 385. And as you can see, after maybe a few weeks or so, we made our way back down towards that support level again. Now, this day, I remember this day specifically, last Friday on May 20th, we were really bloody, right? We were on a downtrend all day. It was looking really bad. But towards the end of the day, like the last hour, we got a push. And what happened was the buyer stepped in and pushed the stock back above 385. So you know what? I was like, guys, I was telling the guys in the chat, this looks like a really good double bottom setup. If you don't know what a double bottom is, it's a chart pattern. It's a bullish reversal pattern when you have obviously one bottom right here. And I'll show you really quick. We have our first bottom, boom. And we have our second bottom, and then we take off. Now, usually with a double bottom pattern, you don't want to get in until it breaks the neckline. But for me, I decided to be a little bit more risky and get in on this candle. Now, I didn't just get in once we started pushing. Obviously, if I got in down here around 380 and rolled it all the way up, I would have made a ton of money. But I had to make sure that we closed above 385. So I didn't get into my SPY swings until next week. Or I'm sorry, I didn't get into my SPY swings until the end of the day. And then I swung them into next week, which is today, Monday. Now, when I got in, like I said, it was about 5 minutes left. I got in the 395 calls. I paid about $95 per contract. And this morning, and if we go on the 15-minute chart, just so we can see where it opened up this morning, it opened up, let's say I got in around, I caught probably the second half of this last candle. So around, I would say right here around 388, somewhere around there. And this morning it opened up at 393, around that area, 393, 393.15, 393.30, just around that area. And I was able to sell for 61%. Really good play for the group. I actually sold for just under $2,000 because I didn't load that heavy going into next week, you know, over the weekend swing. I wanted to limit my risk, so I decreased my position size, but I was able to sell for around 61%, just under $2,000. A great day, a great way to start a new week, right? On Monday morning at 9:30 a.m. Eastern time, right? Super awesome. So we went into today with a really good win. Now today, let's see, where do we capitalize for today? So SPY obviously was still in the watch list for today. And as you can see, we started running a little bit, right? And let me go on the 5-minute chart just so we can see it a little clearer, right? So we opened up around 393 and we immediately, you know, made a move to the downside. But if you know me, I like to let stocks or the market choose a direction before I just hop in. Now, I was already, you know, bullish, I guess you can say, because I swung over the weekend and obviously I swung calls, but you never know in this market nowadays. So I was definitely unbiased. So I didn't know what to expect. We could be bullish, we could be bearish, as we have been for the last, I don't know how long. But as you can see, we took advantage of opportunity wherever it presented itself. So when the market opened, we immediately kind of sold off a little bit, right? We sold off to around 391.18. And as you can see, this very next 5-minute candle, we came down and then we bounced off that same 391.18, 391.10 level, right? That was clearly support, right? And actually what I want to do today, I'm going to do something a little different for you guys. I want to use the rewind feature, right? So let's break this down. So the market opened, right? We had that first candle, right? We have that first wick, right? Just first 5 minutes. We have the second 5 minutes right here. Okay, we bounce off 391. Let's see what we do for the second 5 minutes. Boom. Okay, we have 2 bounces. We may get a strong push, right? Or not a strong push, but we may see some upside right here just because we bounced twice at this 391.16 level. I wouldn't be surprised if we did bounce. Now, let's go ahead and make sure we chart our pre-market high, because that's going to be our resistance level for our intraday chart, because that's going to be important. I always like to chart pre-market high, pre-market low, right? Let's go on the 3-minute chart. We see we already started making a move to the upside. The 1-minute chart, you can see that we definitely already bounced and we're making that move to the upside, right? Remember, 1 minute, we're on the 1-minute chart, so each candle represents 1 minute. That's why it looks a little different. Now, let's see. Let's go back on around the 3-minute. Let's see what we have. Okay, we were making a push. Now, I'm telling the chat at the same time, and I'll put a screenshot up. I was telling the chat, guys, watch 394.55 rejection. Watch pre-market high rejection. Isaac, why are we watching the 395 rejection level? Well, or 394.55 rejection level? Well, it's pretty simple. I noticed that as we pushed up, the volume kept dropping. This was a weak move up. This was not a strong move up. So I was almost 100% confident that we were going to reject. So I went ahead and I told the chat, guys, I'm looking at the 390 puts. Get ready for the rejection, right? We go on the 5-minute. You can see we already rejected twice. Let's see. We go on the 3-minute. Obviously, the time frames are it's going to look a little different because I'm using the on-demand feature for trading view, right? But let's see, right? You can see that we have a doji up top, right at the top of an uptrend, right at resistance. We have a bearish candle that came through. I went ahead and hopped into 390 puts on this 3-minute candle. I hopped in right here. My stop loss was above 394.55 because my play would have been invalidated if it did break above. But you can see already we rejected 394.55 a few times already on the 1-minute. Right, we fast forward, boom, we're starting to get some downside move. Right, we're getting downside movement now. We completely rejected. We're looking good. My price target is 391.16. Right, 391.16. That's my price target. Boom. Right, we hit our price target. We exit the play. Isaac, well, you could have, got more money out this play. No, we exited the play. We're staying disciplined. If there's opportunity to re-enter, we will. But in this market, you do not want to give away gains because it's so choppy. It's random. It's not the time to bag hold these gains, right? We're already we sold these puts for 65%. That's a really good gain. That's a really good win. So we need to take this money and get out of there. And eventually, as you can see, the price ended up going back up. And let's see what happened next. What we do next. Boom. Now we're at 394.55 again. In the chat, I'm saying, yo, watch for puts. Watch for puts. We're at 394.55 again. This is a double top, right? Remember, we talked about a double bottom last time. Back here on the 4-hour chart for last Friday. Now we have a double top pattern. But as you can see, boom. So we enter puts. I enter puts right here. I enter puts. We have a doji. I don't care if we got in a little early. My stop loss is above 394.55, right? I have my stop losses. We enter for puts. Let's see what happens. And we look good at first. We look good. We have a little downside. But we start wicking, we wick out. And as you can see, let's see, actually, I remember I was looking at the 1-minute. So excuse me a little bit, these candles move really fast. But I remember looking at the 1-minute chart for my execution for this play. And my stop loss was 394.55. I entered around here and I sold my position up here. For a loss. Now, the first play I entered let's see, let's go back a little bit. This rejection play, the one that we entered first for the first play of Monday, aside from the swing we sold, we entered at $107 per contract and we sold for $177 per contract for a 65% gain. Now this play, the candle closed above, we went ahead and got out the play, and I think we sold on this candle, if I'm not mistaken. We sold on it might have been it was actually this candle. We sold on this candle. It was above 394.55. Sticking to my rules is no time to hope, no time to pray. You know, oh my gosh, I hope it goes my way. I hope it comes back down. Nope, there's no time for that. You always stick to your rules. So I exited the play. But the best part about this, and one thing I wanted to relay to all my members, all our members in Blueprint, is that you want to have big wins, you want to have small losses. So we took the first play from $107 per contract to $177 per contract, and this loss was only from $20 per contract to $17 per contract. Small losses, big wins, right? And that was all for SPY. We didn't play SPY anymore today. That was it. But look, we hit it for 65% win right here, and a very, very small loss. And don't forget, we had a 61% win on this swing as well. So SPY was successful today. We had a very successful day for SPY. Next, we have Amazon. We played Amazon as well. This was more of a big account play, but let's check this out. Right, so let's go back in time a little bit. Amazon ran up at gapped up over the weekend, not by much, but it gapped up a little bit. Let's go ahead and press play on this. It's 5 in the chart. As you can see, it immediately tanked. Now, when it tanked, we did not catch this because obviously we were playing SPY, right? We were watching SPY. We weren't watching Amazon. And as you can see, Amazon got really choppy, right? We're just looking at the price action. It got really choppy. But sometimes within the choppiness, you can find some sort of pattern. And that's exactly what we did. Let's wait for this to finish. And okay, so here, I called out SPY puts, $1,900 puts, because I found a rising wedge on for Amazon, right? Amazon was in this rising wedge. I believe I had a price target around 2100, right? Obviously, you want to get the bottom of this wedge as well. But we entered once we broke. As you see, we're death crossing on the 3-minute. We entered off the rising wedge break. Let's see what we have. Price target 2100, right? We're staying strong. Boom, we're here. 2100. We're in and out the play. Obviously, this was, let's see, this is probably like a 7-8 minute play. Let's see, 5, 10, 15, 20, 25. Okay, more like a 30-minute play. But as you can see, we hit for, I think this one went from $588, meaning $588 per contract, to, if I'm not mistaken, it was around $725 per contract. So for our big accounts, this was a really good win. Small accounts, we definitely ate on SPY earlier while minimizing our losses. Today was very successful. We had the 61% swing, 65% gain on SPY, 15% loss on SPY, and then a 23% win on Amazon. Look, big wins, small losses. 23% isn't very big, but if you're day trading, it's a really good win. I have no complaints. We look really solid today, and we're looking to be more consistent tomorrow, right? We want to win every single play, but if we lose, we're going to minimize the losses. So that's all I got for you guys today. Hopefully you enjoyed this breakdown. I'll definitely have more coming out for you guys. I'm actually moving to California, so that's why things have been kind of inconsistent on YouTube and social media lately. But I promise you, once I get to California, we're ramping it up. I'm putting a lot of content out for you guys, a lot of learning information, a lot of requested videos that you guys have for me. And with that being said, I will catch you in the next video.